Good morning, everyone, and welcome back to Crypto Oracles. So today we have quite a few things to talk about. We're gonna take a look at the crypto tax bill, the Ripple lawsuit, Polygon and migrations from Ethereum. We're gonna talk about ETH bullish news. We're gonna talk about Polygon, parachains, Shell, and Akala. We're gonna look at Solana Gaming and Filecoin storage. And lastly, some juicy Bitcoin predictions. So stick around until the end. Don't forget to subscribe, smash the like button, and follow us on the other channels linked below. So let's get going. First of all, let's take a look at the markets. We're looking at a pretty healthy day today. Nothing majorly changing direction. Bitcoin is back up to 61,000 USDT. Ethereum still ranging around the 5,000 mark, 4,400 mark, looking to break the 5,000 mark. This has been trading in a uptrending channel, and everything else looks pretty balanced. Nothing that strikes my eye here. Shiba Inu is back up. Remember, it was down 20% yesterday. It's back up 20% today. We're going to talk about it in a separate video. Actually really well on Link in the last couple of days. This has been going for a new all-time high. It has to catch up quite a lot compared to some of the other coins. So a quick stop to check the fear and greed index. Once again, we are back into greed. We cleared out of the extreme greed a couple of weeks ago, and we'll just keep monitoring this in the days to come. So first thing, the House passes a $1 trillion infrastructure bill with crypto tax for Biden's approval. Now, this is another attack to the crypto space, so let's dive into it and try to understand it together. So the bill is aimed at primarily improving the national transport network and internet coverage, so it seems to be a quite good motivation. But the issue is that if this bill was to be signed into law by President Joe Biden, it would enforce new provisions in relaxation to crypto tax reporting for all citizens. Now, this sounds like something is getting relaxed, is actually being restricted, and the bill will mandate that we do further reporting. There are further reporting requirements for crypto community that requires all digital asset transactions worth more than $10,000 to be reported to the IRS. And so this complicates things quite a lot. This is a lot more reporting that we currently have in the space, and it's quite unclear from the bill itself who has to report, who's defined as a broker, and how this will work. So this legislation imposes a badly flawed and in some cases unworkable cryptocurrency tax reporting mandate that threatens future technological innovation. So of course, we've seen similar bills in the past, and this can represent a slowdown for the space. Someone is even going as far as saying this is unconstitutional. I'm not an American, so I wouldn't know about the specific details, but this is definitely an attack on cryptos. As a repercussion, the inability to disclose crypto-related earnings will be treated as a tax violation and felony. What this is saying is, if you don't disclose crypto-related earnings and you don't report transactions above $10,000, you could go to jail. So this is a pretty serious bill that is being released that could be passed. And if passed, of course, this will definitely have an impact on crypto, will definitely have an impact on the prices, on the market, and on the future technologies to come. So let's see what happens. We will keep you updated, but this is still something that we definitely want to keep an eye on. Next up, remaining in the same sort of space, the Ripple lawsuit. So Ripple is now asking for clear guidelines as the SEC, to the SEC, as the lawsuit rolls on. So they're asking for more clear guidelines. The SEC has been kind of vague recently in the Ripple lawsuit. And the top executive are now calling upon Congress to create a more transparent crypto regulations. So we see the opposite end of the spectrum here. Now here is the crypto space asking for government for clearer regulations. So I think on both hands, on the government end and on the crypto space end, we both want to be more clear on how things work. But I think on both sides, there is misunderstandings of what we should be doing. And this is quite clear from these pieces of news we're looking at here. So Ripple Lab CEO as took Twitter to say that the legislative branch should consider creating clear guidelines for the crypto industry as a whole, which we would definitely benefit from. There's a lot at stake here, which is why we need Congress to play a leading role in providing guidance and clarity. Of course, this lawsuit with Ripple is not just about Ripple, it's pretty much about the whole crypto space. Remember that what the SEC is saying is that Ripple is categorized as a security, which would imply a lot of different legal obligations and reporting, and it's a completely different sort of product. What Ripple is saying is that Ripple is not a security, and depending on how this goes, this could affect the whole space. So next up, let's still stick around for Ripple. So wrapped XRP to launch on the Ethereum blockchain. So wrapped coins are basically tokens that are digital assets stored in a vault on a separate blockchain, and they're equally pegged for the value of another asset. So in the case of Ripple, this means that we will have wrapped Ripple on the Ethereum blockchain, but this is a 1-to-1 exchange ratio to XRP. And this is quite good, in my opinion. We've seen Ripple being delisted from multiple exchanges because of the lawsuit. So being able to trade Ripple on the Ethereum blockchain is actually bringing back a large flow of users and possibly volume, picking interest back up. So this will be very interesting to see. Of course, remember that the Ethereum blockchain currently has very, very high fees, gas fees, and that will have to be solved and will be solved with Ethereum 2.0. But this is still bullish news for XRP. Next up, let's talk about Ethereum then. So a lot of companies are migrating away from Ethereum because of the gas fees we just talked about. So Enegra migrates digitized equity tokens from Ethereum to Polygon blockchain. So the Enegra group is a commodity trading firm based in Malaysia. And back in 2019, they tokenized 100% of its equity, which enabled their shareholders to digitally exercise their dividend, voting, and governance rights. So they basically tokenized their equity to improve liquidity. And now that there is better technology, they want this to be faster and cheaper. They want to have compliant transactions on the blockchain for their investor to take advantage of. So they're moving everything from Ethereum to Polygon. So very bullish news for Polygon Matic. Not so much for Ethereum, but we've seen this, and we're going to talk about ETH 2.0 at the end of the video. Next up, bullish views on Ethereum. So let's jump into this. This is an interesting report, and that just looks at the Ethereum price for the years to come. So this is a report generated from Finder that consists of 50 fintech specialists or a group of analysts. The Ethereum coin ETH is expected to reach a value of $5,114 by the end of 2021. We're actually fairly close already at $4,400 right now. But what's more interesting in this report is that this number grows as time passes. So we're looking at $15,000 by 2025 and then $50,000 by 2030. Now, of course, these are very, in my opinion at least, they're very fiddly predictions. There is no way we can predict this far in the future, but of course we can rely on history, we can rely on the technology, we can look at how strong Ethereum has been, especially with the NFT space lately, how strong the adoption is for the technology, and we know that ETH 2.0 is coming up, so it is likely that Ethereum will keep growing and the price of ETH will grow with it. So if we take a look at some of the report details, one of the key reasons behind Ethereum growth is the relationship to Bitcoin. So the idea here is that there is a possibility, especially with ETH 2.0, for Ethereum to flip Bitcoin, which means the market cap of Ethereum will actually be larger than the one of Bitcoin. So let's take a look at ETH 2.0 for 1 second. So in December 2020, so about last year, we had the first phase of ETH 2.0 being launched. This is called the Beacon chain. And this was an upgrade to introduce staking on the Ethereum chain. So remember that ETH 2.0 is moving from proof of work to proof of stake, similar to Cardano. The second phase of ETH 2.0 rollout will be to merge this Beacon chain into the mainnet. So we'll bring the mainnet to proof of stake. And this will happen mid-2022, and hopefully this will lower the gas fees, and this will eventually bring back a lot of users to Ethereum that we now see flocking to different chains. So as we can see from this chart, in 2021, the Bitcoin market dominance fell to its lowest since mid-2018. So that's Bitcoin on the orange line. Well, Ethereum hit 19% of the total cryptocurrency market cap. And we can see the Ethereum peak here in 2017 and the Ethereum peak here in 2021. So there's definitely a growth in Ethereum, and we've seen this with the number of blockchain wallet users worldwide in between November 2011 and today. So there's definitely exponential growth that it's destined to keep growing, especially if we can lower the gas fees. So still bullish news for Ethereum, but we will have to wait for ETH 2.0 to roll out completely. Next up, let's talk about Polkadot. So Polkadot, let me give an introduction. It's a slightly different network from the networks that you may have seen around. So the blockchain is completely different from, for example, Ethereum, Cardano, or similar blockchains like the ones we all know. So rather than working with just one network, it works with a set of independent chains that could contain different functionalities. And this was created to offer scalability to more traditional blockchains like Ethereum. So now we start to see new projects, new blockchains being linked to the Polkadot blockchain in what's called parachains. And we're looking at parachain auctions, which means that anybody can participate in what's called a crowdfund auction. And Shell was the first one to officially launch on the Polkadot network, which is a very important milestone for Polkadot as it shows that the network has been adopted by companies. So I'm not going to dive into details what Shell is. You can take a look, we can take a look in a separate video, but this is very bullish for Polkadot. And what's going to happen this weekend as well is the Akala blockchain. It's launching on the Polygon network as well. And we're going to see at least 5 more before the end of the year and 5 more at the beginning of 2022. So let's keep an eye on Polkadot. There is definitely exponential growth. And the more interesting thing is that it's a completely different blockchain from the ones we know. Next up, back to NFTs. So NFTs, gaming, metaverse. So Solana Ventures, Lightspeed Venture Partners, and FTX launch a $100 million fund, gaming fund. So this is just another bullish news for NFTs and the metaverse. We've seen a lot of companies creating funds for the gaming space and the metaverse as a whole. And here we can see one of the executives from Lightspeed Ventures saying that they strongly believe in the space, and they describe gaming as a massive opportunity to bring the next billion users to Web3. Although the estimates kind of vary, the global gaming market is set to generate over 100 billion in annual revenue, and this is expected to cross the 200 billion mark in the next couple of years. And lastly, if we think about it, gamify, it's also gaining traction as a concept within the so-called metaverse, which describes this kind of futuristic version of the internet as we know today. And this will include gaming, virtual reality, social media, businesses. And if people even just spend a fraction of their time on this metaverse as they do in real life, this would be a huge marketplace. And it will be incredibly meaningful for the crypto space as well. So other bullish news for NFTs. Let's look at the technical side as well. So all these NFTs have to be stored somewhere, and Filecoin is one of the prominent solutions for this. And this is just an interesting piece of tech news, I would call it. So Filecoin has now surpassed 13 exabytes of storage capacity within just 1 year. Now, 13 exabytes, it's 1 million terabytes or 1 billion gigabytes of data. So earlier last month, the Flow blockchain had onboarded Filecoin to be its official storage collaborator. This has been described as a move towards ensuring that holders and issuers of non-fungible tokens are securely available everywhere. So the issue with NFTs, of course, is that we want this to be there and we want it to be there forever. And Filecoin is one of the major players in the space. So very interesting to see how the tech is moving around these actual business products. And lastly, let's take a look at estimating Bitcoin price top. So I found this interesting article that kind of gives us a secondary opinion, a secondary idea of how we can estimate Bitcoin top cycle top. So What they do in this report, which is kind of interesting, they're throwing into the mix the idea of long-term older cost basis and long-term older historic spend. Sorry, this is a mouthful. Long-term older historic spend output profit ratio, or SOPR. Now let me translate this. What they're saying here is they're looking at long-term holders and the cost of holding long-term, and the spent output of historic long-term holders, so people that are holding for a long time, and how much are they outputting, and how much are they spending of their of what they hold. So this is more of a logical exercise to take a look at how you can estimate the top, but I thought it was pretty interesting to look at. So the SOPR is basically telling us the price sold over the price paid. So how much did you pay for what you're holding, and was the price at which you sold it to basically take some profits. So it indicates what profit levels long-term holders realized in the past. So you can think about it as saying, okay, at which point long-term holders said, I'm going to take profits, massive profits. We're talking about whales, we're talking about large profits. And in 2018 and 2021, these was at 20.74 and 9.04 levels for this metric, which means that that's a nearly 2,000% and nearly 1,000% realized profits. So we can now look at it and say, okay, what about this current cycle? So we can use this estimate on the current cycle. So we can say that if long-term holders look to take the same level of profits like they did in the previous all-time highs, then the cycle top would be around $160,000 to Bitcoin. If we're looking at all-time highs for 2018, if we go even back, if they expect to take, the latest all-time high, that I think that referring to the one in May, yes. So if we look back in January 2018, this is 2,000%, then the cycle top would be $350,000. So midpoint in between the two would place us at $264,000 for Bitcoin. Now, it's also a fair assumption to say that as these cycles go on and as we go on with time and the space develops, most long-term holder will probably expect lower profits to what they expected in the past, so they could be taking profits earlier, and that would drive the price down. Remember, we're talking about very large portfolios and mostly whales. So this will still be very bullish though, because if we look at these figures, the lowest one we've seen was $160,000. So we're still looking at a Bitcoin price of, let's say, $120,000, $130,000, which is also fairly in line with Plan B. If you know what Plan B is, we're going to talk about it in a separate video, and definitely go check it out on his Twitter page. So thank you for listening. Thank you for watching this video. We will come back to you tomorrow with some more news, some more information about the crypto space. Don't forget to subscribe, smash the like button, and follow us on our profiles linked below. Thank you very much, and see you tomorrow.